Okay, so Italy still has a debt crisis. Its debt is probably going to be up to 160% of GDP this year, which is huge. I think at this point the ECB is effectively monetizing all Italian debt, and they're receiving some sort of pan European bailout fund. So the only thing keeping Italy and Europe as a whole going is the fact that Germany has so much money and has the ability to pay for anything. But Germany's economy is not going to do as well as in the future because it's going to face competition from China, because exports have been a huge driver of Germany's economy, but now Germany is going to face competition in everything it exports from China because China is moving up the value chain, and because China has a huge cost advantage over Germany, China is going to give Germany a lot of trouble. So, the only thing keeping Europe as a whole going is the fact that Germany's economy is so strong and it has the ability to pay for anything, but that's not going to last as much because Germany's going to start facing competition from China and it's not going to be doing as well. So, anyway, back to Italy. I have this article up from The Hill, and it's Italy's challenge to the global economy, because Italy's debt problems haven't gone anywhere, and their debt has surged to record levels in the wake of the coronavirus. So let's see what they have to say. It would be an underestimate to say that something is wrong in the state of Italy's economy. This should be of deep concern to the incoming Biden administration, since Italy could be well on its way to another sovereign debt crisis. We'll see exactly what happens. An Italian debt crisis, in turn, has the potential to derail the US and global economic recoveries, especially not considering that Italy is around 10 times the size of the Greek economy, and that has the world's third largest sovereign debt market. Even before the COVID-19 pandemic, the Italian economy was in very poor shape. Since the country joined the euro in 1999, the country's per capita income has declined. Yes, its economy has not grown in over 20 years. This means that today the average Italian citizen is economically worse off than they were 20 years ago. Meanwhile, the country's very poor productivity performance has resulted in a large loss of international competitiveness, and public debt has risen to a disturbingly high 135% of GDP. Well, it's now at least 20 points higher because of the impact of the coronavirus pandemic. The pandemic has now dealt the cruelest of blows to Italy's tourism-dependent economy, because tourism was a huge factor of Italy's economic picture, and now because of the pandemic, tourism is completely wiped out everywhere, and it will be for at least the next year or so. It is now officially estimated that in 2020, the Italian economy declined by almost 10%. That's astounding. I think even France only declined like 4%, though I'm going to have to double check the numbers, so take that with a grain of salt, making it among Europe's worst performing economies. Due to another surge in the pandemic, it is now expected that the economy will recover only 3.5% in 2021, and will only regain its pre-pandemic level in 2023. So after declining 10%, their economy is only going to grow 3% next year. That's completely horrible. At the same time, the pandemic has raised serious questions about the country's ability to service its debt. In 2020, the Italian budget deficit is estimated to have risen to over 10% of GDP, while the country's public debt to GDP ratio has skyrocketed to over 160%. Yes, that's exactly what I was saying. That is by far the country's highest debt level on record. Stuck in a euro straitjacket, which does not allow the country the option to depreciate its own currency to stimulate its external sector, Italy's prospects for restoring order to its battered public finances do not appear good. If it engages in budget austerity, it risks deepening its economic recession and further eroding its tax base, but if it does nothing to reduce its budget deficit, its debt level will keep rising. In normal circumstances by now, the Italian government would have had to pay significantly higher interest rates to borrow as investors increasingly come to doubt the country's ability to service its debt. However, there's not normal circumstances right now, in that the European Central Bank has chosen to buy an ever-increasing amount of Italian government bonds to keep borrowing costs low. as I said before, the ECB is effectively monetizing Italy's debt. Indeed, as a result of the ECB's action, the Italian government can now borrow at zero interest rate, despite having public finances that have never looked worse. The Biden administration would be mistaken to think that Germany would allow the ECB to indefinitely buy large amounts of Italian bonds to keep the currency afloat. Well, what are they going to do if the ECB cuts Italy off? They're sunk. And Germany probably does not want to deal with the fallout, so I actually wouldn't be surprised if Germany just fails to pull the coup de grace and just keeps the situation going indefinitely. But maybe I'm wrong. We'll see what the Germans actually do. Already last year, before the ECB began buying a disproportionate amount of Italian government bonds when undertaking quantitative easing, the German Constitutional Court raised serious questions about the constitutionality of the ECB's bond buying operation with the Treaty of Lisbon. Now that the ECB is buying Italian government bonds for the explicit purpose of keeping Italy's interest rates from rising, one must expect that the German court will eventually prevent the Bundesbank from participating in the ECB bond buying operations. It might do so on the grounds that the ECB is engaging in the monetary financing of a member country's budget deficit, which is explicitly prohibited by the Lisbon Treaty. Well, I guess if the court pulls the coup de grace without having to deal with political fallout because it's not a political institution, that might be something that plausibly actually can happen. We'll have to see. Yet another reason for the Biden administration to brace itself for an Italian sovereign debt crisis later this year is that it also is all too likely that Italy will lack the political will to undertake the economic reforms that the ECB might require it to justify the ECB's large-scale Italian bond purchases. So it took all the political will Italy had to muster to pass the first round of political reforms during the first round of the debt crisis back in the 2010s. And even then, after things quieted down, they then passed measures to roll some of the measures back. For example, Italy rolled back the labor market reforms it passed, almost to the point of them not to where Italy started back before the reform after a debt crisis happened. So it is a serious question of whether Italy has the political will to even pass any reforms. If they can't pass any reforms, the ECB might say enough is enough and be unwilling to do anything for the Italian economy, even without the German court's prompting. It is all too likely that Italy will lack the political will to undertake the economic reforms that the ECB might require of it to justify the ECB's large-scale Italian bond purchases. In this context, the growing public discontent with the Conte government over the pandemic's resurgence does not bode well for Italian political stability in the years ahead. In 2010, the Obama administration was caught flat-footed by the Greek sovereign debt crisis that roiled global financial markets. One would think that the incoming Biden administration can ill afford to make the same mistake with Italy, especially given that, at around $3 trillion, Italy's government debt today is a large multiple of that of Greece's. For which reason, one has to hope that the Italian economy remains very much on the incoming Biden administration's radar screen. So Italy's economy is in a horrible situation. They have a huge load of debt that they cannot repay back on by themselves. And the only thing preventing Italy from collapsing the crisis is either the ECB continuing to monetize Italy's debt, or Germany essentially bailing out Italy's economy through some sort of pan-European program that loans Italy money. In absence those two things keeping Italy afloat, Italy is sunk on its own. So the only thing that Italy has to keep it going are those two things, and if either of them balk, Italy's sunk. And who knows if they'll be able to keep this situation going indefinitely on their own, even if they want to. So that's it for everything. Please like this video and subscribe to my channel.